Welcome to TradeTheNBI.com. This is John. This report is for, well, the 2nd of September. Hope everyone had a great Labor Day break and enjoyed themselves with a little barbecue. The market is pretty much caught in this little zone of uncertainty. But we can see MBI white rising. Magenta has crossed below, yellow below the 33 as well. So we could have a potential crossover point at that. We still have cyan under red, so the bias is still to hold where we're at. Your worst case scenario is this narrowing range of the Morganacci, which we also know will not last because as it condenses, it will then break open. Um, it's just the way of it. So all we have to do is see where we're at. Now we're already seeing DOC steel resetting, so it's primed for new fund money coming in at the start of the month. It's got to go somewhere. It's got to go into treasuries. Some of it might actually, because if the expectation is lower rates, you want to grab, what available delta there is to, you know, be ahead of the game when they do get reduced, and because you don't know when that's going to stop. From an NQ standpoint, still weakness. So I filled back all of the gains that it previously had, and of course, these are all news related, but you do see the MBI white spike here with magenta below 25 and also below MBI white. So you've got a little bit of a divergence there with the DOC not quite reflecting that same threat, but horrible shakeout reading relative to where we were. So we talked about this going down the road that you end up with, higher highs are relatively equal, but much lower shakeout. And you've got a problem. You've got distribution taking place within the highs that exist. And here's your treasury. It's just flatlined. So the Fed has become hyper irrelevant, though that may change depending on the court rulings and whether Trump gets his additional people. I mean, they're already on the hunt, so I think they have a pretty good idea of what they want to do already. But the market is terrified of that, and they think that it's going to lead to dollar destruction. And this is the narrative that's being played out, which is why euro and things like that are all climbing because they think that this somehow is the impending doom, just like the tariffs were. Though that ruling obviously is going to have to work its way through the court still. It's going to get appealed to the Supreme Court. But it matters because Trump's on the losing side of that one, which bizarre, but okay. So they'll have to work through what that does. And that would be a huge blow to him because it would really impact his entire foreign policy. So, from an oil standpoint, we're still blah, not helpful, not killing, just nothing special. And that's actually a bit painful because it really retards any growth potential that could be built into the way things have evolved. I mean, we're finally starting to see a little bit of the turnaround in oil from production standpoint, based on it. But like we said, back in January, that it was going to take almost to the last half of the year. Here we are, and it's finally starting to have a little bit of an impact. Still going to take more time, but it's finally built there. And again, this is that whole idea that the euro is the haven. They're preparing for war, so war footing means they're going to be spending lots of euros buying stuff. From a gold standpoint, everyone thinks that the reality is currency debasement, plain and simple. That should be good for crypto. It hasn't been so great for Bitcoin at this particular stage. Been trading with the Nasdaq a little bit stronger in the fade, but you also had the big whale selling to shift into Ethereum. It's well documented, and so that's why Ethereum has held up so much better and outperforming. And that's just an arbitrage trade, no different than we see everywhere else. What we do see from the intraday chart, we had the nice pump and filled it back in, but when that filled back in, your MBI weight was leaving, and that caused a dip further down towards zero, and we met that earlier in the pre-market holiday dip, and you can see still riding within it, but you've had magenta, strong move back up, so you got massive short covering within that. This is what it looked like before the holiday, and it was ugly. And then, boom, in post market Asia that opened up, things started looking decent. But as we get to the European session, they turned it all around. They got all excited, and still up towards the peak. So that's the long and the short of it. But everyone's going to get back here soon, probably by the end of the week, and that's when we start to get some fireworks because we're going to start to see some things transition as everyone goes back to work, back to school, and everything gets refocused. That's the long and the short of it. Indicators have gone out, so be sure to check for that. Have a good one. Trade well.